Hey everyone, welcome back to Corporate Decoder, the place where we dig into the documents big companies are required to file with the government. Today we are going to check Freddie Mac's report about a director leaving and a new one coming in. Sounds like office drama, but let's see if there's more to it than that. This report, filed on March 21, 25, is an update on some changes happening at the very top of Freddie Mac. The main thing it tells us is that a director, Christopher Herbert, has left the board and another director, David Farbman, has been appointed in his place. So Christopher Herbert decided to leave his position on the board of directors in March of 2025. He was a pretty important guy, chairing the mission and housing sustainability committees like compensation, executive and risk. That's a lot of responsibility. To fill that spot, David Farbman was appointed to the board, the Federal Housing Finance Agency, or FHFA, which is basically in charge of overseeing Freddie Mac, made the call to bring him on board. As a board member, Farbman will be paid like the other non-executive directors. You can find the details of how much they get paid in their last annual report, specifically the one filed in February. What's also typical is that Freddie Mac will sign an agreement with Farbman that protects him, meaning he can be covered for various expenses and legal costs if something goes wrong. They already have a standard version of this agreement. We know this because it was filed with the SEC a couple of years ago. So what does it all mean? Well, a director leaving can sometimes signal bigger changes at a company, but in this case it seems pretty routine. Someone left, someone was appointed, that's just business. Now, let's dive a bit deeper into Freddie Mac's overall health. Well, this report doesn't give us detailed financial numbers. It references the annual report filed in February, and those are the numbers we can look at. While we cannot see the full financials in this short report, it's worth noting what Freddie Mac actually does. They buy mortgages from lenders, package them into securities, and sell them to investors. This helps make mortgages more available and affordable for home buyers. Their performance is heavily influenced by interest rates and the housing market in general. Archon my thoughts. The change in board members doesn't necessarily raise any red flags on its own. What's more important is to keep an eye on the bigger picture, how Freddie Mac is managing its risks in a changing housing market and whether it's fulfilling its mission to make housing more accessible. One thing to watch out for is how rising interest rates might affect their business. Higher rates could slow down the housing market, which could in turn impact Freddie Mac's profits. Ultimately, this report is a small piece of the puzzle. To really understand what's going on with Freddie Mac, you need to look at the broader economic trends and how they're impacting the housing market. Thanks for watching. If you found this analysis helpful, give us a like, leave a comment, and subscribe for more corporate deep dives.